Imagine this. It's a Monday morning. You've just sent your client a request list. 20 items, balance confirmations, contracts, bank statements, bank depreciation schedules. 3 days later, your inbox has 240 files in it. Spreadsheets, PDFs, scanned handwritten notes. Your client emails you and says, "I think I sent everything. Let me know if you need more."
That is very familiar. That was basically my last month.
So you open the files, you start going through them, and somewhere around file number 80, you realize you're lost. You have everything, but you can't answer the original question. You have a mountain of information, but you've lost the thread.
And that's not just a productivity problem. It's a professional English problem. Because at every stage, asking, probing, making sense of what you receive, there's a conversation. And the quality of that conversation determines the quality of the work.
Welcome to the Balance Sheet Guy. I'm Jack.
And I'm Jenny. Today, we're keeping it tight. 3 phases, 1 scenario, and 1 question. 4 words that separates a good professional from a great one.
Let's go straight to the framework. Information gathering has 3 phases. Phase 1, ask precisely. Phase 2, receive and probe. Phase 3, synthesize. Most people are decent at phase 1. Very few people do phase 3 consistently. Let me break them down.
Phase 1 first.
Phase 1 is about making your ask specific enough to be useful. Early in my career, I asked a client for all contracts. They sent me 312 documents, including contracts for the supply of coffee to the staff kitchen.
Please tell me you're exaggerating.
I wish I was. 2 days of my life. My senior came over and said, I meant contracts above $50,000 in the current year related to our scope. Same request, completely different result. The precision of your ask tells the client and tells yourself that you already have a picture in your mind. You're not fishing. You know what you're looking for.
So the quality of the question reflects how much you already understand.
Exactly. Phase 2, receiving and probing. This is where most of the conversations happen. You've received something. You need to understand it. And the instinct is to ask closed questions. Is this right? Can you confirm this? Closed questions get you short answers. The better move is to open it up.
And the phrase you'd use for that?
Could you walk me through this? Or, what happens when? 2 phrases that do all the work in a professional conversation. Walk me through gets you a story. What happens when gets you the edge case. What the process does when things go wrong, when the customer doesn't pay, when an exception comes up. That's where the controls are.
And phase 3?
Phase 3 is the synthesis. We'll get there after the scenario, but I'll plant the seed. The question is 4 words. Hold on to that. Today's scenario is an audit walkthrough, a type of interview that auditors use not to test numbers, but to understand process. The auditor is meeting with the client's accounts receivable manager to map the AR cycle from end to end, from invoice to collection to write-off. No documents yet, just conversation. This is a phase 1 and phase 2 moment in real life. The auditor already knows what they want to understand. That's phase 1 thinking. The conversation itself is phase 2, opening up the process, probing the edge cases, clarifying terms.
Workplace scenario. Audit walkthrough. Understanding the accounts receivable process. Setting. Year-end audit fieldwork. An auditor is conducting a walkthrough interview with the client's AR manager. The purpose is to understand the end-to-end receivables cycle, invoicing, collections, escalation, and write-off, before selecting procedures and requesting documents.
Thanks for your time today. I want to make sure I understand your receivables process from end to end. Could you walk me through the cycle from the point where a sale is confirmed to the point where payment is received?
Sure. Once sales confirms an order, our billing team generates the invoice, usually within 2 days of dispatch. It goes to the customer by email. Standard payment terms are 30 days, though some customers are on 60.
Got it. And what happens when a customer doesn't pay within terms?
The system flags it automatically after 30 days. Our AR team sends a reminder. If it goes to 60 days, the account manager gets involved. Anything past 90 days goes to the finance director.
When you say the system flags it, is that an automated report, or does someone run it manually?
It's automated. A report runs every Monday morning, and the AR team works from that.
That's helpful. You mentioned credit limits earlier. I want to make sure I understand this correctly. Who has the authority to set a customer's credit limit? Is that a sales decision, or does finance sign off?
Sales managers can set limits up to $50,000 without finance sign-off. Anything above that needs the finance director.
And is that policy documented? A credit policy or an approval matrix of some kind?
Yes, it's in our internal procedures manual. I can send you that.
That would be great. One last area. What happens when a debt needs to be written off as uncollectible?
There's a write-off request form that goes to the finance director. Anything above $10,000 needs board approval.
Okay. Let me just confirm my understanding of the full cycle. Invoices go out within 2 days of dispatch. Overdue accounts are flagged automatically at 30 days, escalated at 60, and reach the finance director at 90. Credit limits above $50,000 need finance sign-off. Write-offs above $10,000 need board approval. Is that a fair summary?
Yes, that's right.
Perfect. Thank you. That gives me a clear picture of the process. I'll follow up with a short document request based on what we've discussed.
Let's look at the structure of that conversation. The auditor asked 7 questions and came out with a complete map of the process. What made it work?
The questions were open. Walk me through, got a story. What happens when, got the controls.
And notice what else happened. Every answer was a prompt for the next question. The AR manager said the system flags it, and the auditor immediately asked, is that automated or manual? That follow-up is what revealed the Monday morning report, which is actually a key control. If the auditor had just accepted the first answer, they would have missed it.
So phase 2 isn't just asking questions. It's listening carefully enough to know which answer opens the next question?
That's exactly right. And then notice the last thing the auditor did. They summarized the whole cycle back to the client. Let me just confirm my understanding. Invoices within 2 days, flagged at 30, escalated at 60, finance sign-off above 50,000, board approval above 10,000. That summary does 3 things. It confirms you heard correctly. It gives the client a chance to correct any mistake. And it signals that you were processing information, not just collecting it. That's phase 3 starting.
So what's the 4 words?
What does this tell us? That's phase 3. After that walkthrough, you don't just file the notes. You sit with them and ask, what does the AR process tell us about the risk of overstatement? What does the Monday morning report tell us about how reliable the overdue tracking actually is? What does board approval for write-offs tell us about management's attitude to bad debt? Those questions turn an interview into an audit finding. That's the synthesis step. That's where the judgment lives.
Information gathering is the input. Synthesis is the output.
And the output is what the client actually pays for, not the checklist, the opinion.
Okay, 2 takeaways.
First, the phrase. Could you walk me through? Use it in every process conversation. Open it up. Let the other person talk. Listen for the controls. Follow up on the answers. Second, the question. What does this tell us? Ask it after every piece of information you receive. Not just, do I have enough, but What is the picture actually saying?
That's it for today. If this was useful, subscribe and share. And leave us a comment. What's the most useful question you've ever asked a client? We'd love to hear it.
Until next time, keep asking good questions.
And keep building the picture.
Could you walk me through the cycle? What happens when a customer doesn't pay within terms? When you say, "Is that?" I want to make sure I understand this correctly. Let me just confirm my understanding.